Good morning, friends. This is Sanjeev here. We have come up with initiative coverage with stock idea on Kalpataru Power and Transmission. With a buy recommendation, currently stock is trading at 114 and we expect we have a target price of 151. What we like about the industry, what we like about the stock is basically there is a remarkable some of the trends in the industry. Over a period of last couple of years, the industry has faced a lot of competition because of which margin got affected, and so does the valuation of most of the stocks, and Kalpataru was also affected. And what we believe, there are initial signs of easing off in the competition, and because of the huge order book already the company is having, and a lot of opportunities that are already intact domestically as well as international market, we believe there is a lot of opportunity for these companies, and despite that there is a valuation which are very much low and looks attractive to us. Hence we believe this space will be beneficial, and we believe players like Kalpataru will be one of the most beneficial out of it. So looking ahead, the trend that we can say is that the pressure on the margin will continue for a couple of years probably, but at the same time what we have seen, there is initial signs where PGCIL, that is Power Grid Corporation, has tweaked their stringent basically the norms, which will erase some of the competition, and it will help in long run to sustain margin at least at a healthy margin that we can say around 10%. That's what we expect. Now valuation, and as valuations are low, we believe the margin pressure as well as other concerns like cash flow are already priced in the stock. So we think it is attractive. Now revenue, we expect Kalpataru to grow at to record a CAGR growth of 17% on the revenue front and almost 18% on the earning growth. Margin are likely to be on a consolidated basis around 10%. In that, we have assumed that Kalpataru standalone, which is into pure transmission and distribution business, EPC contractor, will continue to generate around 11% kind of EBITDA margin, and its subsidiary JMC project, which is into construction business, will have a margin in the range of 8%. So club together, we expect for a consolidated entity to have a margin of 10% going forward in the next 2 years. As I said, we believe margin and cash flow worries are already priced in the stock, and currently it's trading at 7 times or 8 times in its forward earnings, compared to around 15 times in the historical average. Though we believe the historical phase and time are not relevant because of the change in the industry dynamics, but still we believe 7 and 8 times forward earnings with a CAGR growth, earning growth of 17-18% for a company like Kalpataru, where margin are likely to be sustained and a healthy cash flow and a lighter balance sheet. We believe this is attractive. To mention about the company's healthy balance sheet, it has got a debt equity ratio of 0.6 compared to most of its peers, which are close to one time. So this is also a positive point for the Kalpataru. So to value Kalpataru, what we have done, we have taken a SOTP valuation, as the company has also invested couple of projects which are BOT projects, and they have put it in SPV. Apart from their subsidiary JMC projects, which is contributing significantly to its bottom line as well as top line. So we have taken SOTP, and based on that, we have given 9 times forward earnings valuation on FY12 for the Kalpataru Transmission, which is the parent company, standalone company, and 6 times forward earnings P multiple we have assigned to GMC projects, and 1 time to the equity whatever they have till now invested in the SPV. So put together, we arrive at a target price of 151. So we basically come up with this idea to recommend buy on the stock Kalpataru Power Transmission with the target price of 151.